the reality is it's for the whole globe will be using more energy in the years ahead. There is enough oil out there right now. That's why I think we might see prices soften. But I think once we get into the winter and the demand picks up as it normally does in winter, that's going to be when people realize that if the SPRs start being refilled, the European SPR, the China SPR, the American SPR, that could be a 500,000, 750,000 barrel demand increase just there. I think people will realize that the game has changed and that oil prices to attract capital have to be higher than they are today.
Okay, ladies and gentlemen. So today we have Josef Schachter back on the show, who is the founder of Schachter Energy Report. And today we will discover energy and oil in great detail. So Joseph, thank you so much for being here.
I should be back with you.
Yes, it's a pleasure to have you on the show, sir. So, of course, if we could focus on oil first. So with everything that's happening at the Strait of Hormuz, it's difficult to know what's going to occur tomorrow, Joseph. But would the Strait of Hormuz be sort of the main factor that you believe that determines the oil price at this moment and would do that for the next few months?
Well, I think the fact that the burial of the former supreme leader really got the angst of the people of Iran, the IRGC, the mullahs, and they were their hatred for America for killing their supreme leader came to the fore. They then went and attacked two crude oil ships and one LNG tanker from Qatar. One of those crude oil was from Saudi Arabia. And then, of course, Trump got upset and said, the agreement where you could sell oil is no longer valid, and sanctions are back. They then went and attacked, 80 to 85 targets, mostly Bahrain, Kuwait, American military targets, and then the Americans retaliated. So right now we're in a situation where the talks are allowed to go back in place. The price of oil's come back off from $76 after Trump's commentary, and it's now $71. I just still think that if the talks continue and there is some progress over the next few weeks, we could go down to the mid 60s. But I think that's going to probably be the bottom for the price of oil, and I think that's going to be another great buying opportunity. Regarding the Strait of Hormuz, I think the U.S. Navy has the lane that they're protecting. They were doing convoys for a while. There are a small number of ships going through, but until they can get a guarantee that drones and missiles will not be fired by Iran into that lane. And there's really three lanes. There's the Iranian lane that the companies are paying and they have to declare themselves and give all the information to the Iranians. And then the IRGC lets them go through without a tax. The middle lane is the problem. That's where the Iranians have mined. It's the biggest lane. And that's the one that the Americans would like to see the mines removed, both by Iran and by the United States and other countries. They'd like Britain to come in with minesweepers as well. And then you have the American protected lane, which is right by Oman. So that's really the basics of it. So if the fighting stops and ships start coming around on the U.S. naval side, Oman, that will help. There's still a lot of ships that are out there with oil on them. There might be a glut near term because once people knew it was safe, they took their ships out. The problem is we don't see crude oil ships coming back in to reload. That's the basic problem. And that's why I'm bullish long term is I think right now there's going to be enough oil out there. And we're all seeing, countries that have said, oh, we're not allowing our refineries to sell jet fuel and diesel to other countries. They're now taking that off because there is an adequate oil supply. The price of crude being sold by Iran is at a significant discount to the Brent price or WTI price. And even Saudi Arabia, the biggest producer in the Middle East, is producing and selling at a discount to the official prices because they're trying to buy back market share. So there is enough oil out there right now. That's why I think we might see prices soften. But I think once we get into the winter and the demand picks up as it normally does in winter, That's going to be when people realize that if the SPRs start being refilled, the European SPR, the China SPR, the American SPR, that could be a 500,000, 750,000 barrel of demand increase just there. Then you get winter, which is usually a million, million and a half. I think that's going to be where people start realizing. And also, you've got the fact that a lot of reconstruction has to happen in Iran and in Saudi Arabia, Kuwait, Bahrain, UAE, because of the damage done because of all the war fighting. I think people will realize that the game has changed, and that oil prices to attract capital have to be higher than they are today. It's easy to, you say, okay, what's the marginal cost of supply? You can go to the Federal Reserve of Dallas, where they do a lot of good work, and they put out, presentations, and they have a chart in there which talks about the break-even cost for every basin in Texas. And the bottom line is $65 US is needed to attract capital. And if you want to see growth, you're going to see no more than that. One thing I'd point out to people is, they talk about, oh, the demand destruction. Well, the United States is year to date demand is 20.67 million versus 20.12. So we're looking at over 550,000 barrels of demand growth just in the States. So, and it's the biggest consumer. The reason people talk about demand destruction is China's a very sophisticated commodity buyer. And when things are high, they stop buying. When things are low, they buy. And so right now, they're going to probably be back in the market. We've already seen the teapot independent refiners buy out there buying, and they're buying both Russian crude, Iranian crude. India's taking advantage of the cheap prices. So I think we're going to see, demand destruction argument go away as we go through the coming months.
Yes, you made some really good points. Thank you so much for that. Can I ask you this question? So, people like Doomberg, they are quite bearish on oil. And, one of the arguments would be, well, if we did not see 150, $200 barrel oil during the peak of that Iran war, well, that must mean that it cannot go anywhere near to these to even 120 after it's all over, and it's probably going to go much lower. So what would you say to that?
Well, on the lower side, as I mentioned, the biggest basin in the United States is Texas. And if the American companies say, I need $65 oil to drill another well, then, that's the big issue on the downside. So you need at least mid 60s. Now, could you see if there's a recession issue or a COVID issue where prices go lower? Yeah, that's, if the economy has 5 to 10 million barrel a day demand, shut down very quickly because of some existential issue like COVID or something like that, a health concern, that would take prices lower, but not for very long. On the upside, I don't believe in the near term we're going to see $120 oil like we did during the spikes of Russia invading Ukraine and the Americans going after Iran. But if my view is we're going to see $80 average in Q4, which means an $80 average for 2026. And I believe as the SPRs get filled and demand growth starts picking up again in the third world, if we want lithium, nickel, copper, all those things, they're going to consume more energy, both oil and natural gas. That's going to drive the price up. And we're using $90 WTI in our numbers. So we see a lot of value out there. Many companies are trading at 2 and 3 times cash flow. How many industries in the world can you buy at that kind of cheap valuation? And we're finding a lot of stocks still yielding 5, 6, 7% dividend yields. And as you know from our research, we break our companies down between conservative, growth, and entrepreneurial. The conservative is, strong balance sheets, big companies, dividend yield, and growth. And the growth companies that are focused more on growth, many of them don't have dividends because they are focused on putting the money back in the ground, and they have cheap, F&D costs, finding and development. And then the entrepreneurial are really the companies where the drill bit matters. And if the lie detector of the drill bit cooperates and they find something big, then the stocks can really be outperformers. But even taking into account the whole universe from the April 2025 buy, when we sent out the action alert and the SCR buy list, and we recommended buying, that index went up over 100% from April 2025 to the May June high. And many stocks on our list that we cover and that we recommend were doubles and triples. So we're now in a correction phase, which we've talked about. And if you remember, when the last time we talked, we said when you get over, if you have a position that you bought, which was a 5% position and it doubles, well, it's an overweight position, and when the stock is lofty and you're concerned, pull it back to a normal position and take some profits and have some cash on the sidelines. That's what we did, and that's what I did personally. So we're now in a position with some cash. And we think that if we do get this pullback to 64, 66 WTI, we're going to send out another action alert with new recommendations and reiterate the best bargains on the coverage list. As you know, we cover 35 companies in the oil and gas and the energy service sector, Canadian domestic, Canadian companies working both oil and gas. We have Canadian companies working around the world, Thailand, Colombia, Uzbekistan, Trinidad, etc. And then we have the Canadian energy service sector, which works all around the world, and there's bargains there as well. So for investors, we've been saying hold off, build some cash, be ready for the next buying opportunity. We think that's possibly going to come in the weeks ahead.
Very interesting. Thank you for sharing that. And do you think, Joseph, at this moment, there is still a certain risk premium associated to oil price?
You could argue there's $5, $6 of war premium still in there, because you don't know what President Trump's going to do. You don't know what the IRGC is going to do. He may blow a gasket, or they may decide they're going to attack again the U.S. military bases. So there is a war premium in there. As I said, the Federal Reserve of Dallas says, the biggest producer in the world is the United States. If demand is 106 million, the U.S. produces 23.8 million of it and consumes 20.6 million of it. So the reality is that's why you get the exports of the light oil that's coming out of Texas, because they refine in the refineries in the Midwest and the Gulf Coast the heavier crudes that they have from Canada, from Venezuela, from Mexico, etc. And those plants were built, the refineries were built to manage heavy oil. So they sell the light oil to the world. But I think that the demand side is going to be proven in Q4 when we get to winter 26, 27. And if people start seeing, oh boy, not only are they filling the SPR, but demand growth in many countries is started up. Other Asia, South Korea, Japan, and then China continues to, rebuild their SPR, and the teapot refineries are busier. I'd also keep an eye on Africa. If Africa, starts putting in, the mines that are needed for copper, nickel, lithium, precious metals, they're going to consume more energy. When that starts showing up in data from the EIA or OPEC data, I think that's going to wake people up to the fact that demand destruction was really only related to price, and that when price was high, the buyers stepped away, and when the price gets back to something that's attractive, they'll come back and buy.
Yes, and I would actually like to talk about the big picture, if you look at oil demand over the next 5, 10, 20 years, because we hear politicians, Joseph, talk very poorly about oil. They're talking about replacing it with other things. But if we look at where the world is going with these data centers, it's difficult to imagine oil peaking anytime soon. So it could be another many, many decades until that happens, right?
Well, if you believe that we're going to need the third world to give us the copper, nickel, aluminum, all the things we're going to need, they're going to be increasing their consumption of oil. Where oil demand could come back off is in the industrialized world, the OECD. But remember, when you're looking at the demand side, it's not just to be looking at a gasoline demand or jet fuel demand. The one that matters is one called other oils, where that's where we get the plastics and the polyethylene, polypropylene, and all of those things are needed, and we'll see that grow, even though you might see gasoline demand taper because people will buy more EVs as they become more functional. China's BYD and others are selling actively in Europe, and Canada's opened the door for the sale of a certain number of Chinese autos, EVs. And so I think over time, I think as we use more EVs, remember the power side's going up, which means that if you want, and Meta just did a big deal in Alberta to more than a $10 billion deal, and that means a lot more consumption of power. And they're going to be building a power plant with Pembina delivering natural gas to that plant. And the government of Alberta says, we want data centers to come in here. We have natural gas. We have land for you, but you have to build your own power because we don't want prices for industry that's here today or consumers like my family and people in my neighborhood having to pay more for gas because Meta or Amazon or somebody like that builds a big plant and takes power off the grid.
And do you think, Joseph, that could be where nuclear comes in as well? Because we know that there is a lot of interest in these potential small nuclear reactors. And if you look globally, the sentiment towards nuclear is getting better and better. Are you bullish on the nuclear sector for the next, few decades?
Yeah, I think that the SMRs are going to be real, but it takes time to build them. So they're not a solution in the next 3 to 5 years. It's a decade probably before they start filling up that demand for power. A lot of companies who are doing data centers are looking into that. The big, AI firms are looking into it. So I think that that's a possibility. But in the meantime, for the near term, some countries that are using coal will use coal for power. That's not happening in Canada. Coal is not in favor here. U.S. is using natural gas. Canada is using natural gas. But in Europe, coal is still a big deal. China, coal is still a big deal. So if they want power for that, they can get it that way. But the goal is to get rid of coal just because of the environmental issues, which means the fuel in the middle term is going to be natural gas. The lithium crystals and antimatter, which we talk about in the science fiction world, they're not in my lifetime or my grandkids' lifetime.
Right, yes. If I could ask you about what's happening in Russia at the moment, Joseph. So we have been seeing Ukraine, doing these long and deep strikes and targeting a lot of these Russian sites. So is that a big deal on the supply side? Because we know that Russia has a dark fleet. They have been selling their oil into many countries, but do you think it matters what we're seeing at this moment?
Well, Ukraine is trying to, get an end to the war, and so what they've done is they've gone after military targets and energy related targets because they want to take away the money that comes into the country. So they've been going after refineries everywhere. The attack on that Omsk refinery, which is one of the biggest, or the biggest in Russia. So what's happening is Russia does not have enough gasoline and diesel, so they're importing it. But the oil that was supposed to go into those refineries is being sold in the market. And so they are getting a lot of money coming in through the eastern part of Russia from sales to China and other places, and the shadow fleet. And of course, the Americans removed sanctions because of the shortage, because they want to keep prices down. There's something called an election in November, and is worried about that. So I think that Russia is, maybe, having damage and repairing these refineries is not going to be easy and it's going to be expensive. So what I think Zelensky is doing is trying to get Russia to the table. Still is an issue over the Donbass, but Ukraine's military with drones and all the the things they've been doing on the defensive, they've kept they've kind of stalled the Russian offensive. They're now pushing the Russians back, and so we'll see what happens. Is this something that Putin's going to want to get a deal on, or does he still think that with the use of North Korean troops and others that they've hired from Africa and other countries that they can have a chance? But so far, the battlefield looks like it's in Ukraine's advantage.
Yes, that certainly looks like the tide is finally shifting. So, Joseph, we covered a lot. Would there be anything else that you would like to cover that you believe is important that we haven't mentioned yet?
Yeah, I think people should realize that energy is going to be in our lives for, in conventional energy, oil, natural gas. So in your portfolios, you should have some amount. So if you live in Europe, you may want the big multinationals that are living, that are based in Europe, be it Eni, be it Total, be it any of, BP, Shell. But Canada is something to consider because Canada has one of the biggest basins in the world. Our basin is not as drilled up as the United States, and we have companies. People say, "Well, why is Canada cheap?" Well, our political system a year, before under Trudeau was anti-fossil fuels. Our new prime minister and the new government is for growing the pie. They realize we're a resource nation, so we need to build out our forest products, our base metals, our precious metals, our energy related areas, both oil and natural gas, build a bigger pie so that all Canadians can benefit and we can cover our social services and we can build more pipelines and we could be an exporter to the world, both on the West Coast and the East Coast. So Canadian stocks are very, very cheap. So, what I recommend is for people to learn more, go to our website, www.schachter, S-C-H-A-C-H-T-R, energyreport.ca. Take a look at the, free copies of older material. And if you decide you want, we do a number of products. We do weekly, that Ion Energy, which you get, which is our macro piece. So we do on Wednesdays. And then we do two SER reports, which talks about the companies and why we like them and a bit macro and charts in it. And then we do podcasts. So companies that we like, we'll do a podcast on. So there's a lot of good information for people, and have some international exposure in your portfolios wherever you are. The United States, of course, is a big basin and the biggest producer in the world. And if you have a choice of Russia or Saudi Arabia or United States or Canada, of course, you'll go to the States. And there's an advantage for Canada. If you don't like us, what are we going to do? Send a Mountie after you? It's not like we have the Marines and the Navy and the Navy SEALs. So I think Canada becomes a more attractive investment place over time, and I think people should take advantage of it because our stocks are trading at 2 and 3 times cash flow on depressed commodity prices. Historically, at market tops, they traded 7 to 8 times peak cash flows. So that gives you the chance for 5 and 10 baggers. And as I said, when we talked earlier about the low of from April 25, the index alone went up 100%, and many stocks that we cover tripled. So there's lots of opportunity. Wait for this correction. We'll send out an action alert when that happens. We'll give you the background of why we believe it isn't attractive. We'll be giving some new buy recommendations, and we'll highlight the best bargains that are out there. So for people who are watching you and are covering, listening to your podcast, take advantage of that. And again, be involved in energy. I'm waving the flag for Canada, but I mean the reality is it's for the whole globe will be using more energy in the years ahead, and we all consume it. We all use electricity. We all use natural gas. We all put gas in our cars. Even if you use AV, you're using power. So our day-to-day lives are not going to change. We are going to be using more of them over time. Why not have yourself an investment in that area?
100%. And if people would like to follow your work, I will have the link in the description below, and I highly, highly recommend it. So, Joseph, it was a pleasure, like always, and thank you so much for your time.
My pleasure, Vlad. Have a good summer.